Hi, Don. Chad and I are getting married next year, and we're wanting to maybe potentially buy some time, and we're kind of confused. We're going to be newlyweds. We're not sure what to do or where to go from here. So we're asking, what's the first process in buying a house?
Nicole, that's a really good question. Let me go on and start off that buying a home for the first time is really confusing. And it's confusing because realtors and people in the business use all these acronyms. And it's also a very big step to take because buying a home is serious business. And let me just go on and talk a little bit about that. The first thing you want to do is you need to decide, do I really want to buy a home? Sometimes people are better just renting. If you think you're going to be moving it within 3 or 4 years, don't buy a home now, but wait. Save your down payment and just rent. But then again, if you think this is where you're going to live for about forever, then go ahead and start thinking about buying a house. Now the first thing you and Chad need to figure out is, where do I want to live? It needs to be somewhere that's maybe close to where you work because with the cost of gasoline nowadays. It needs to be an area that you'll feel comfortable and safe in, and that would usually involve someday you might have kids even, I don't know. But if you have kids, then you want to be sure it's an area where the schools are good. Also, another question, which I guess we ought to ask, I know I'm talking to you and Chad's not here right now, but you have to make sure that your spouse, Chad, is going to want to buy a house also. Because a lot of times I'll run into situations where the wife really wants a house, the husband could care less. The husband's happy. So you need to come to an agreement before you even begin to look.
Donna, how would I know how much I could afford when I want to go to buy a house? What would be the process of that?
And Nicole, one of the first things you also, after you decide you want to buy a home, the first thing to do is how much home can I afford? And there's a bunch of different ways to look at that. Traditionally, what you'll do is you'll go to a bank or you go to a loan broker, that's somebody who makes loans professionally, and talk to them. And they'll ask you how much money you make, and based on how much you and Chad make together and how much your debts are, they'll figure out how much you can afford. And with the low rate interest that we have right now, it's amazing how much of a home you can actually afford to buy. Now, as a young couple, I don't really recommend you spend up to the very top of your dollar limit. You don't really want to buy a home at the top of what you can afford. Try to always go a little bit below your means because things happen. People have accidents, babies come along, and all of a sudden you're down just to one income. So always buy below what the loan brokers suggest. The homes won't be quite as nice, but it's a good place to start. Another thing to consider is how much money do I have for down payment? So if you haven't started saving for down payment, now is a good time to start putting some money away. Most loans nowadays require a minimum of 3.5% of down payment. So if you buy a $100,000 house, you're going to need at least $3,500 plus the closing cost. Closing costs are going to run you on a $100,000 home or another couple of $1,000s. So you better plan on having $5,000 or $6,000 available to buy it. Now there's other ways to buy it, which I'll talk about later on, but just figure about $5,000 or $6,000 for a $100,000 house. Some problem that a lot of young couples have when they're looking to buy homes at first is my income fluctuates because I only work part-time. And would that qualify for a loan? Well, of course, yeah, it could be counted. The thing the loan broker is looking for is funds that are provable, that you get a W-2 for at the end of the year or you get statements. It's not one of these where I get paid cash under the table. Those things don't count.
Hey, Don, where would I go for a lender then to start out with?
That's a really good question, Nicole. How do I choose a lender? Well, there's all different types of lenders out there. You can go to your credit union, a savings and loan, a bank, a loan broker. Each one offers different services depending on your situation. There is no right or wrong answer on where to go. A lot of people like to go to mortgage brokers because they offer a wider range of products. And by products, I mean types of loans. Now, the economy's changed in the past few years. There used to be dozens of different types of loans. Now there's just a few. But if you go to a loan broker, you just need to call around and talk to one and find the one that you feel comfortable with. Some people go to big banks, like, well, I won't mention the name of the bank, but some people go to these large national banks, and they're pretty good to go to. The problem is when you go with a big bank, you're just one of the many people trying to get a loan that week. And it's sometimes a little more difficult if you've got some minor issues on your credit or if your income's not quite up to snuff yet. Then there's also the small little banks, the community banks. And I've discovered they're also a good place to go. That's more personal, they work with you. Now the problem with community banks is that because they're smaller, they can't always service the loans quite as quickly as a big bank. And that's, I think, the reason why a lot of people go to loan brokers. And the loan broker, again, is a guy who has more than one bank that he deals with. He might deal with General Motors, he might deal with Ford Credit. There's all these different companies that make loans. And he has a bunch of them that he works with. So he'll look at your situation and he'll say, Nicole and Chad, they're perfect for this one. And then that's where he'll try to place the loan to make it easiest for you. And then you get paid a commission. And in fact, every loan broker gets a commission off of these. So you got to consider that also. So they don't get paid if they don't make a loan. So they will work hard to help you get it. But their hands sometimes are tied by what they call the underwriter. Those are the people behind the scenes who make sure that all the T's are crossed and all the I's are dotted.
I heard there were different types of loans. What does that mean, and how many different types are there?
Nicole, there's a lot of different types of loans. The primary ones are VA loans, Veterans Administration loans. Now to get those, you or Chad have to have been in the military, I think for at least 3 years. The second type is an FHA loan, that's a Federal Home Administration loan. And those anybody can qualify for. They're the ones that require the minimum of 3.5% down plus the closing cost. It's a government-based loan. They're relatively easy to get. And then another type of loan is a conventional loan, which is again is government-backed, and you get those from banks or savings and loans. The bank will make the loan to you and then sell the loan to the government. Another type of loan is an adjustable rate loan. And the difference between a conventional or FHA and VA and an adjustable rate is, on an adjustable rate, the rates fluctuate. They could be, say, 4.5% right now, and then in 3 years they'll adjust it up or down depending on what happens to the economy. Those were really popular back in the early 2000s, but now that the way the economy is, people are shying away from those adjustable rate loans because they're just probably going to go up, not down. Another type of thing to consider is how long am I going to have my loan for? There's a 30-year, 20-year, 15-year, 10-year loans. A lot of loan brokers and bankers are saying, oh, get a 15-year loan. From all the hundreds of people I've helped with this, I strongly recommend you to go for the 30-year loan. And the reason is you can always try to pay it off sooner and in effect make it a 15-year loan. But if you ask for a 15-year loan, your payments are going to be a little bit higher. And then what happens is, say, someday you decide to have a baby and you have to quit work. Well, now you're going to be stretching to make that payment. So always get the least amount of payment you can and then go from there.